Hey, Brad, just for the record, the Santa Claus rally comes at the end of the year, last 5 days of the last 5 trading days of the year, plus the first 2 of the next year. Easy to conflate that with the holiday season, and that's what most people do because really from Thanksgiving until January, heading into the month, you have this one solid, very continuous block of historically bullish signals and historically bullish trending stocks. So the big question is, are we going to fulfill that destiny this year? Let's start out with this chart, which just shows the seasonality in December, average going back to 1950, pretty simply calculated. You can see we get a little bump into the middle of the month, but kind of retrace sometimes, at least on average. And then towards the end of the month, that's when we get that rise, and that's when things really seem to dry out most years with respect to volatility and volume. That's when traders are getting away from their desks. And I did do a sector breakdown. For what it's worth, communication services, which is a relatively new sector, that does have the best median gains here. That's followed by consumer discretionary. That is the tech sphere, that is the retail sphere. I think probably fitting because that is the Christmas shopping time and the holiday shopping time falls within this window. Financials, healthcare, energy among the other winners here. And really, you only start seeing losers when you get to tech and real estate. Both of those very interest rate sensitive. Let me just show a chart here. This is a 10-year T-note yield, and I've shown this a couple times today. I think it's very instructive. It just shows the power of the bond market. This peak here has coincided, and this downtrend has coincided with a huge ignition rally in innovation stocks like the ARK stocks and Bitcoin, bunch of others, and that has facilitated this rally. And as long as interest rates don't spike up, and that would be a huge, huge warning sign, there's no reason to think that this cannot continue. But then also thinking about volatility into the new year, and this is going to get a little bit more longer term. I just want to show you the VIX over the last 10 years. Let me put that in a line chart so you can see. We are at very, very low depressed levels. In fact, 15 is kind of a divider line. It's not exact science, but below 15, that's when you tend to see the S&P 500 really in rally mode. And that's what this chart is about right here. This is the S&P 500 back to the beginning of the VIX in 1990. These red dots are when the VIX is under 15, and that you can see is concurrent with a lot of these secular rallies in stocks. And you can see in here, this was in the wake of the global financial crisis, a bunch of rallies. There was a one-off here in 2011. We did have almost a bear market down about 20%. And then the question is this something that portends future gains, or is it that one-off that we saw here? I would say more than likely, we're probably going to see some big future gains, but the proof is in the pudding. And also that's very long-term. We're worried about December right now, and full speed ahead, I just don't know what that speed is going to be. Is it going to be idling to slightly, I don't know, a couple miles per hour here? Are we going through a school zone, or are we going to race into the end of the year? I think we've already seen the big race, so I'm not expecting fireworks, but some bullish action nonetheless.